Episode Part 2. Where exactly fraud enters the system. A 2000 crore rupee loan does not disappear overnight. Fraud does not start at default. It starts much earlier, silently, inside the system. Today, we identify the exact points where corruption can enter. Point 1. Inflated collateral valuation. Before a big loan is approved, banks appoint valuers to assess land, machinery, stock, buildings. Brand value. If valuation is artificially inflated, example, real land value equals 200 crore rupees. Valuation report shows equals 600 crore rupees. Loan sanctioned based on fake strength. Question: who signs the valuation? Independent valuer or influenced report? Fraud entry. Point 1. External valuer plus internal approval nexus. Point 2. Manipulated financial statements. Corporate submits audited balance sheets, profit or loss statements, cash flow projections. If revenue is overstated, liabilities hidden, related party transactions concealed, then risk assessment becomes distorted. Auditors play a key role here. Fraud entry. Point 2. Borrower plus auditor misrepresentation. Point 3. Political or external pressure. Large corporate loans sometimes involve strategic sectors, infrastructure projects, politically connected promoters. Pressure may be informal, verbal. Institutional credit officers may hesitate to reject. Fraud entry. Point 3. Decision influenced beyond risk logic. Point 4. Credit committee collusion. Loan passes through committees. If risk warnings ignored, red flags suppressed, internal objections removed from minutes, then approval becomes engineered. Fraud entry. Point 4. Internal sanction authority compromise. Point 5. Swift system manipulation. In past cases like the one involving Punjab National Bank, investigations found Swift messages not recorded in core banking. Internal system bypassed. Fraud entry. Point 5. Technology loophole exploitation. After that case, systems were integrated tightly. Point 6. Post-disbursement monitoring failure. After money is released, banks must track fund usage, conduct stock audits, verify project progress. If monitoring becomes symbolic, funds may be diverted to shell companies, sent abroad, used for unrelated businesses. Fraud entry. Point 6. Weak follow-up enforcement. Point 7. Evergreening of loans. Instead of declaring NPA, banks may give fresh loan to repay old loan, restructure repeatedly, delay classification. This hides stress temporarily. Fraud entry. Point 7. Artificial loan survival. Point 8. Delay in declaring willful default. Willful default means capacity to pay exists, but borrower chooses not to. Declaring it requires procedure. Delay allows asset transfer, personal wealth movement. Fraud entry. Point 8. Time advantage. Core investigative insight. Fraud rarely begins at disbursement. It can begin at valuation, documentation, risk assessment, committee approval, monitoring stage. It is often a chain of small compromises, not one big crime. When fraud happens, it is not just a borrower's failure. It is a system where multiple gates opened at the same time. The next question is, who benefits when gates open?